I'm Deborah Borchardt with your midday market update. Well, the markets are selling off. Put your hard hats on because there are stocks falling. I'm here with Ben Willis from Albert Fried. So Ben, you know what got us on this downtrend today was news out of China, and in particular having to do with the banks. And now there's a little bit of back and forth as to what exactly is going on over there. But, you know, some are saying, you know, it's really a solvency issue. And then others are saying, well, you know what, they're just trying to shut down the shadow lending that's happening. So let's talk about what's going on over there, because either way, it's a little bit scary.
The way I see it is that the People's Bank of China is telling the rest of the world the politically correct story while enforcing an entirely politically incorrect process in their own country. It is a cash crunch, but they're making it very clear that the shadow banking industry that has evolved in China has no place in the official structure. So if you don't have an account with the 4 largest banks and do business with them, you're in a real rough shape. And they're purposely squeezing out, causing a cash crunch for any of the outliers outside that realm. You were hearing stories about shutting down online banking services to transfer money. So it's pretty far reaching and something that's not comfortable to anybody in the Western world exactly how it's being dealt with. But, you know, how do you stop a bank run in China? You just don't have them because they'll use exceptional force to shut it down. So this is what we're dealing with. It's adding to the correction mode that we're seeing in the equity markets throughout the world, or I should say more correctly, the correction we're seeing in the fixed income markets around the world. The sell-off in equities is nothing compared to what's going on in the 10-year bond market for the U.S. Treasuries. So that's the interesting dynamic we're seeing play out now.
You know, another thing that's also happening is that their leadership is now, because of all the corruption, trying to start to pull back on all the perks that everybody's getting. You know, their workers do not get big incomes. They get a lot of government perks, a lot of free apartments, a lot of karaoke bars, things like that. You start to take that away, it upsets people.
Well, the real impact, if you want to take a look at it from an investment point of view, has been the impact on the highbrow retailers, the Tiffany's, and the like, where those gifts were all part of that process, and again trying to squeeze that out to the high-end automobiles and all that goes with it. So there was a very exclusive enclave of participants in that are being told that's a big no-no right now, and that's a kind of an old story for Wall Street, if you will, on those stocks. But again, that's all part of the new element that is taking control of China, and they're exercising their command. And we were waiting to see how it would happen, and they're telling the rest of the world we still want our economy to grow at 7% GDP. However, while we're dealing with those people that we're not so friendly with inside our own borders, you're seeing exactly how that's being exercised.
You know, again, as we mentioned, that there's a lot of selling going on over here as a result of that. We're at the end of the month. I would assume that a lot of people, you know, listen, we had a very nice run up on this market, that they're thinking, you know what, let me take some off the table right now and finish out my month in a good spot, and I'll come back at after 4th of July.
You've had a great year in the first 6 months of this in the equity markets. You're still up double-digit returns in the equity markets. Again, I go back to the concern. The real story for correction is in the U.S. Treasury market, in particular, the agency market. So while we think this is a major sell-off of around 5% for round numbers, it's been a long-anticipated correction from professional equity investors. The real pain is in the fixed income. The fixed income in the bond ETFs. We're hearing horror stories about not being able to redeem positions. The manufacturers, the way ETFs are created, there are people that have not been able to close out positions. So that's the real scare. While we want to talk about markets, in my opinion, this is a natural reaction. You're seeing the markets correct themselves. I think this is a buying opportunity for you in equities. As far as the fixed income side, I'm sorry if you're not out yet, but you should have been.
Wow, well, there you go. Getting it from Ben. He's saying get your buy tickets out, get ready, push those buttons on those buy orders because the market's at a good place for you to get in. That's Ben Willis from Albert Fried, and I'm Deborah Borchardt with The Street.